What's up, everybody? Michael and Coco here. You're watching episode 28 of the Weekly Scan.
The Weekly Scan.
The Weekly Scan is all about finding opportunities in the stock market for the week ahead. In today's episode, we're going to be using technical analysis to go over 3 different trade plans. We are also going to be following up on episode 27 of the last 3 trade plans that I set up. And as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience in the stock market, I'd highly suggest you start by paper trading. These by no means are recommendations. This is simply just me and Coco's opinion. With all that said, let's go ahead and hop into today's episode. First things first, I want to give you an idea of where the market is currently standing, and then we could walk into the follow-up from the previous 3 trades, and then we'll walk into the 3 new trades. We're going to do this somewhat quick, but what I want you to notice here on the S&P 500 index, the SPX, is look where it's at. The price action right now is sitting right on the 50-period moving average. So what you can expect to see is it really depends on where we open up next week. But if we start closing below this 50-period moving average, that there itself can bring down other stocks with it. So pay close attention to this 50-period moving average. It's acting as support currently. If we start getting a bounce from this, that could be good for these stock picks. However, if we start closing below it, make sure you have your stop losses in place, because what can happen is a continuation to the downside. If you haven't watched my market brief, I had that posted the other day. You can go back and watch that to get an overall kind of sentiment of what the market is doing. All right, let's go ahead and do some follow-up on the last 3 stocks. So first things first, I traded 3 different stocks last week. I did Nordstrom's, which is JWN. I did Overstock and SRNE. I got stopped out of 2 of the 3, so I have SRNE remaining, and I'm going to walk you through kind of what took place and how it went for me. First of all, how much capital did I risk? The total amount of capital that I risked between the 3 trades was $1,404 in total. The profit for the week was $68.39. So what that means, and it's not like mind-blowing, but I want you to wrap your head around these percentages, okay? The $68, it's not life-changing, but because of trade management, which we'll get into, it allowed me to turn a 4.87% return on the capital that I risked. So I risked a total of $1,404. I profited $68.39. So my return on that capital was 4.87%. Now, like I said, $68 is not that much money, okay? But understand the context here of what I'm saying. I'm risking a certain amount of capital, and I got almost 5% back within 1 trading week. Now, results vary all the time. You can have down weeks that are this big, but because of the trading plan that I stuck to, it allowed me to capture in those profits. Now I'm still in one of those specific trades, which we'll walk in here in a moment, but overall in 1 week to make almost 5% return on a capital is extremely good, especially if you start looking at long-term view over the years, that if you can become consistent with your trading strategies and taking profits when you need to, it can turn into a lot of money over time. All right, so let's go ahead and first walk through JWN. So JWN was one of the ones that I got stopped out, but I didn't get stopped out for a loss of the total $30. Okay, so I started notifying this one about this ascending triangle where it was going up and then kind of here, and then it looked like it was breaking out. And on the 8th was the day that I got entered in. So the price opened up here and it pulled back into my entry spot, which was $16.01, continued to move down, right? And then moved back up. So I was in profit for the close of that day. Now what I told you was I'm going to be moving my stop loss up as the time continues. So what I did was I moved my gray, basically stop loss here, to the low of this previous candle. And then the next day opened up, and then it came down all the way to here, stopping me out in the process. So I got stopped out right below the low of this candle, which resulted in a total of a $16 loss versus 30. So I took a loss there, but this is why it's important, because if I just said, oh no, it'll bounce back, I would have not only lost $30, I would have lost a lot more, because it came as low as $14.20 during its trading week. So, this right here would have been $30. That right there would have been more like $70 to $80 loss. So risk management, very important. Here's ticker symbol OSTK, and this was the falling wedge pattern, and this one really played out well. So within the first trading day of being entered, which was this inverted type hammer looking candle here on the 8th, so I notified it on this hammer candle, and then this day, it opened up, it gapped down, I got my order filled. Now, my entry point, right, was 64.75, and it opened up below that. So what happens is when I had my limit order and it opened up below that, it allowed me to get filled in at a lower price, which worked in my favor. So I got filled lower at the bottom of this trend line. The price that exact day went up and hit my mitigation point at $70.62. In one single trading day, I was able to manage and take profits off the table, okay? What happened then? I moved my stop loss up. The next day, didn't have much action, moved my stop loss again, and then bam, the very next day, I woke up to a 22% gain. Okay, so this candle right here was one big solid green candle, and that was my target area. So I had a target of 84.97. I sold 2 more of those shares. So the mitigation point, I had a total of 5 shares. I mitigated 1 here. Sorry, I mitigated 2 right here, another 2 up here, and then I got stopped out at the low of this previous trading candle. Now, why was my stop loss stopped out here? Simply because when we saw the breakout, I moved my stop loss up almost immediately that same day because it was such a big gain in profits. And I didn't want to lose all of that profits on that single last remaining share, so I moved my stop loss up. And as you can see, the stock just got hammered. So this was right here a failed breakout of the falling wedge, resulting in somewhat of a dead cat bounce. So overall on this one, I did good. I made profits. However, if you didn't manage your trade, you can be looking pretty wrecked at this particular point in time. Here's ticker symbol SRNE. So I'm still in this. I notified it on this hammer candle right here. And what I could have done was wait for a breakout of $7 and then entered in. That would have probably been a better idea. However, then I don't believe it would have been a 3-to-1 risk versus reward trade. Now this ticker symbol, it pulled all the way down day 1. My order got filled right here at $6.05, and it hit my mitigation point also the very first day. So I got to take profits right away, take some pressure off the table. I am still in this trade for 2/3 of my position, so 37 shares I think it is, and my stop loss is I think just below $6. What I like about what's going on here, first off, it keeps on gapping up and then moving lower through the day, so it's just this big fake out. And the reason probably for that is because the short interest on this is darn near 30%. However, if we start breaking above this resistance, this 675, potentially even $7. If we break above $7, this could send the stock a lot higher because all those shorts, the short positions are going to get very nervous and they're going to want to cover their positions, which can really just send this thing up very high. So I'm hoping to see if we get some short coverage and squeeze up above, but my stop loss still remains just below $6 with an active 37 shares. Okay, so that is the recap of what's taking place, just some sideways action, made some good profits this week. Let's go ahead and walk into our top 3 trades going into next week. The first one is ticker symbol TECK, TECK. And really what we got going on is just a nice basing pattern right here. We're putting in higher lows, which is very nice. And we just got to break above this pretty big resistance level here at around 12 to 1250. It's right where this 50 period moving average is, sloping down on nice volume. We have the MACD going up. We have it just above 0, which is nice. The RSI is not giving us too much, and we have some headwinds overway right around $15.50. So kind of my thought process here is I'm not too sure if the move is going to continue to the upside. And you could play it technically a couple of ways. You can buy into this momentum to the upside and then just adjust your stop loss as time goes. And this one right here is on the weekly time frame, so it's a little bit longer of a trade potentially, unless if we get stopped out. But what I'm thinking is maybe we might get a kind of a pullback back test to around this 50 period moving average. So we break out, retest, and then potentially move itself higher, which I would really like. And you know, you could enter in a little bit higher, but it's going to mess up the 3-to-1 risk versus reward ratio. So I'm only going to get filled here if the entry point comes back to around the $12 marker. So $12.03 is where my entry point is. That is what made sense. And then my stop loss is down here at $10.95, just below $11. And that's also right below the 21 period exponential moving average, which is good to use on these weekly time frames. So we broke above it. It's still holding above it. And as time continues, I would just be moving my stop loss up below the low of that 21 period moving average. That's one that I like to use on the weekly time frame. So if I get filled, great. If I don't, it is what it is. That's fine. Let's go ahead and go to the next one. Here is ticker symbol NOG. This as well is on the weekly time frame. And really what I'm seeing here is just this, and you can see this on the daily too, is just this gnarly downwards momentum, bearish context all around. However, we have this hammer candle picking up on a little bit of volume, positive divergence in the MACD, although it does look like it's kind of curling over right here, so keep that in mind. But you can also point it out as somewhat of a double bottom. So what I'm thinking is, if we start breaking above this trend line, it'd be a good entry point. And then we have a target up here at about $1.99, and then we're risking a little bit. So my risk is right below 50 cents, where it looks like it touched down on twice. Double bottom. So I put my stop loss at 48 cents. My entry point is going to be at 56 cents. And my target is at 99 cents. I'd be buying 375 shares. I'd be risking a total of $30 again. And nice little setup. It's just, like I said, it's in bearish context. And we got to make sure, what the S&P 500 does. If the S&P 500 starts closing below that 50 period, most of these trades are just going to get hit out and stopped. So let's see, I guess, what happens. Maybe I won't even get filled for the most part on these trades. But that's NOG. This is my trade plan. Let's go to the next one. Here is ticker symbol DRNA. And this is very similar to NOG. Just a gnarly trend line to the downside. You have the 50 scoping down over the 200, so it's called a death cross. It's getting more bearish. The MACD is slightly aiming upwards, still way below zero, but it's slightly trying to move to the upside. We had a nice hammer candle here with a low of 1650. A little bit of a bounce and a little bit of a pullback, another hammer candle. So if we get a break above this trend line here, which is coincidentally right by the 20 period moving average, this could potentially send the stock on a nice little either a dead cat bounce or just a nice move to the upside. So I don't have a very specific trade on this because I'm not willing to enter it up until we get a daily close above the trend line with good volume. So if we get a close above this trend line, which would put it right above probably $18 and some change, or the 20 period is at 1842, so maybe 1850 and some change, a close above there on good volume would make me enter into the trade probably more towards close a day. And then I would probably put my stop loss in depending where the candle is. If it's, if we have this gap and go sort of thing, I'll have it below that candle, or I can have it potentially below the 20 period simple moving average and follow that. Just in case if there is a trend change and we see it continue to hold above that moving period. As far as a mitigation, you got to mitigate on feel until I maybe see a breakout here. Then I'll probably put up some updates. And just so you know, I'm going to put all these watch lists, all these stocks, so you can see this specific chart in the link in the description below. I'm going to have each chart that I talk about so you can pull the charts up yourself and follow along. That is all I have for you on today's weekly scan. Keep in mind the context of the overall markets. There's some tailwinds taking place. There's not, this episode was probably one of the harder ones to find good setups, and most of them I'm not like even entirely just like blown away with. So if you want to hold off, I would say, I would understand as to why, because really there's just a lot of interesting things taking place next week, including the Fed speak. So the FOMC 2-day meeting is taking place. We have OPEX. So there's just a lot of stuff going on. I would say probably coming into the week after that, we'll see a little bit more clarity as to where this market can start heading. That's all I got for you. I will see you on Monday. Bye.